Okay, so let's look at the monthly. Is going up here. This is USD Japan, and right here we got um, a lot of sellers, and then the buyers come in, and it's going up. And remember that when you see higher volume on the sellers, but it's the buyers still go past, that may be because the higher time frame is saying go past, because it don't look like it's supposed to go past, because the buyers usually come up to here the volume and pass it and go up. It doesn't have to do that though. And then uh on the 3 months, you see it's going up. In the 6 months, and when it's about to turn, you'll see higher volume on the sellers, and then the buyers will be less, and then that's when it refreshes down, and then it takes over the buyers, and the volume is for the buyers is higher than the sellers, and it goes down. But like I said, that doesn't mean it's gonna go down, but that's just usually a sign. But if we go down to let's go down to the 4 hours. If we start down here, we got a 1-2 multi pattern, 1-2, 1-2, 1-2, and then it takes off. This is what you need to look for at the end of refreshes to know once you start seeing that, it should be good to go. And it goes up, you know. So if you don't see that on a higher time frame, you can go down lower and see it. Like right here, it's 1-2, 1-2, and it takes off. Then right here, you got um it's like here you got a 1-2, 1-2 higher again, then it takes off. And you have that for the sellers too. So if you go back up and you look at this right here, this is a 1-2-1, or you could say 1-2-1-2, and it comes down. So you could see how that works for the sellers. Same. Um, well, let's look at this. When you have two going to four, that's a channel. When you don't have two going into four, that's a trend. And usually, when you have the pullback after the fifth wave, it's supposed to go into the fourth of the previous wave, or it could go into the fourth in the refresh after the fifth leg of the previous wave and the beginning of the first wave. And that's how you know, okay, even though, like right here, this might be one, and this is two, and this is three, and then, and this might be four, and it came down and two and four is touching. When you see two and four touching, that means that the refresh for after five might come down lower into the into the refresh after the leg number 5 or into the fourth leg and the fifth leg of the previous wave and comes down because it's tired because 2 went into 4, so then the refresh after the fifth comes down lower. And then, because that's why I'm talking about momentum. So let's say this was 1, this was 2, this was 3, this is 4, this is 5. So you probably had 1 first leg extended, 2, then you had 3 was short, 4, then 5. Then it refreshed and it went down into 1 in the previous part of the last leg, and it went into the refresh after 5 down in here, this area, and it could have hit this level here. So what you normally see is that when the trend is getting tired, leg 3 gets shorter and 2 go into 4. But when you have a strong leg 3, because usually leg 3 is the strongest, then the trend is strong. But when it gets weak after that, in the refresh after the fifth leg, if it is long but it's still able to find somewhere, then it can recover and get stronger. So I would like to say that either 1, 3, or 5 is extended. Usually it'll be 3. And that's how we connect this up with the diagonal. Because with the diagonal, usually 1 is longer than 3. And then 3 is longer than 5. Because 3 can't be the shortest wave. But, but like I said, um, I don't really, that's what they say. 3 can't be the shortest wave. So they say 3 and 5, or one of them, or 1 and 3 got to be the same size. But um, yeah, basically you just have to pay attention to that. Pay attention to that when 2 going to 4, and then um, that's a sign. And then 3 being short, that's a sign as well. Because 3 is supposed to be the longest wave. And so how this is, because after this refresh, you get leg 1. So this is real long. So I would say this is 1, that's 2, this is 3, and this is 4, this is 5. Look how short 3 is. That's how it's still not the longest, but it's longer than 5 and shorter than 1. When you see um, 2 and 4 getting close, which I think right here they're not that close, but they could be touching. So yeah, I guess they did touch because it went down into it. So that's a sign right there that it's getting tired, and then it refreshed, and then the fifth wave didn't really go that far, and then it came back down, and it hit the previous. It went down into the previous waves, and then it recovered, and then it came back down, and then it recovered again. But this is showing you what you can expect, and that's why I say you have to wait for the pullback to come in. and then you had to take it to previous highs and previous lows. So like if I was trading this and I knew it was gonna come back up because you get like the 1 2 1 2, and then it's about to come back up. So I would have just took it to right here. I would have missed out, but I just take it to the top of this or right here. So let's say I would have just took it to the top of right here. Well, I would have took it to right there, and then it came back down. Now with this, I would have just took it to uh, see now. If I was trading this, I probably would have. If I knew it was getting ready to come back up, I would have. You're supposed to just take it to right here at this break. That's the first step, and if it get past there, take it to like here, then go here. But that so if you're not watching the screen, I would just put my take profit right here, and then I will put when I see it start coming up, I would just put my stop loss like right here or right here, and then you go take it up, and then it refreshed. I would say this is one, this is two, right, and then it's starting to go. This is three. You can say that's four, that's five. It's still kind of weak because look, this is two, and it's like two went into four, so it's still weak. And then you see it came back down like a zigzag or double zigzag. I'll say a flat or a double zigzag, and it come back down. And now you got leg one, and then this would be two, and then you say this is one, this is two, this is three, this is four, this is five, and then it come back down. You know, but like I said, and then right here you could say this is a one, two, one. Well, it went lower, so now you got to start it over. But here's one here, one, two, sitting on top, and it after the refresh we say 1 2 1 2 because it's building up, and then it goes up, come back down. Like with these, um, uh, you could kind of say that's kind of weird, but I don't know. But yeah, I mean, right here you get the 1 2 1 2, and then it takes off, and then so I'm gonna say if you want to do the count, it'll be 1 2 3, and then this is four, this is five, and then it refreshes down, then it comes back down, and so like normal, like I said, after the fifth wave, you get the refresh and it comes back down, and it usually come back down into like the refresh of the previous leg. And what this is, when you see this refresh, this is the higher time frame coming in, And once it dies out, that's saying, okay, it's possible that if we can get past here, we can go ahead and go. See what I'm saying? And it's just a higher time frame coming in. And if the buyers is able to recover, that's meaning that it's going to keep going. And so that's how you supposed to help number your count, you know, and you know, so I guess, this would be a bigger leg here. So, you know, you don't have to number them all together. You can just do, so like on a lower time frame, this would be on a higher time frame, this would be one leg. Like this might be a leg 5, and then it refresh. See? And then this would be leg 2, and then this would be this might be 4, and then this would be 2. I mean 5, excuse me, on a bigger time frame. So this would be uh like what 3, and then this would be 4, and this would be 5 on a higher time frame. That's these refreshes allow you to count the legs and line up the time frames. So yeah, like this refresh went back and touched this refresh here. So went into this refresh. Like I said, if this is 1 and this is 2, and then this is 3 and this is 4 and 5, so that's strength because 2 and 4 didn't touch, and then you get 5. So if you want to look back, so like from here, this is probably 5, and that's refreshing down. So you could say this is a refresh. So you could say, so from here, you can see this is a refresh. So now you can say, okay, this is 3, this is 4, and this is 5. And that's what the refresh, then it refreshes. And now it still got enough volume and it's starting to go back up. Now it could come back down and it'd be A, this would be A, and then this would be B, and then C come down. So, but that's what the refreshes do. It just kind of help you figure out, the overall stuff, you know, because after the refresh, the buyers is supposed to come back strong where you don't have 2 going into 4. And then if it do have 2 going into 4, after the refresh, it's supposed to recover and get stronger. But I mean, that's just how, that's how, but that's just like a little trick. So it's like, just remember 2 going into 4 is weak. The leg 3 being short is weak. Leg 5 being short is a sign that it's getting ready to go and refresh. And if you have a short refresh after the fifth wave, that's strong for the other side. But if the refresh dies out, then that's strong for the other side. If it's still in the buyers or sellers territory, it's still enough volume on the one side to make it go back up, then it's still, strong. Uh, and I'm thinking those types of pullbacks is because of the news. So you might have had shockingly strong, shockingly weak news. So then it makes the price go down more. Like those usually what happen with fifth waves. I'm thinking after the fifth wave, you get the correction because you have like shockingly weak, shockingly strong news. And then after that, it recovers and start to go back up. But yeah, that's how. So that's that. Sometimes you got to go down to the 5 minutes just to make sure. You know, but what happens is the market start to turn slow. So it's like once you see it start going down real, start moving real slow, like it might get right here and then start moving real slow. Well, then that's how you know it's getting ready to turn and change directions. When it start to, like around in these areas, it start to move real slow and then it changes direction. And then it goes real slow. And then boom, it just the news come out or it just start going a lot faster and then but what happens it drops faster than it goes up. Just because the market is going up, it's still sold off real quick and then it recovered and then the buyers started going. And yeah, the buyers do pick up, but they also go slow. And it usually that the buyers go slower than the sellers. Usually. Not like with this drop here, this thing could drop real fast. But then when the buyers come in, they come in real quick. After it slow down a little bit, then the buyers come in real quick, and then then it's start to move a little bit faster, but it's still not as fast as the sellers because the sellers come in and it just drop. Then the sellers slow down, and then the market change real fast, and then it shoot up. And then after that, once you on the other side, like maybe you thought it was still a sale and it wasn't, then you get caught in it. And then it start to go a little bit slower, but it still go. When it breaks, it go fast. So when it breaks, it'll go fast. And then it'll slow down right here. And then it'll go real fast down. Then it'll slow down, and then it'll break. And then like right here, it'll be slow and then it'll break and go real fast and then come down, then break and go real fast and then slow. So it likes to do that. But that's how it is. The price drops quick, the stock market go down quick. But all those dollars that it took to bring the stock market up, it was gradual. It wasn't quick. That's why I said the stock market dropped quick within a matter of hours, but all them other to go up, it took years. Like the Dow is at what 50,000. It took all these years to get to that, but let the stock market drop, and it'll drop, be at 20,000 within a matter of a couple of days. It don't take long, but maybe like 4 days, 4 or 5 days. But it didn't take that long to get there. It took way longer to get to that. Why come the Dow didn't go to 50,000 in 19? Well, the economy probably wasn't big enough, but it's just that's just how it is. But like this is normal because the dollar is getting stronger than the yen, as opposed to. But does people go into safety when the economy goes down? Um, the dollar ain't gonna always be going up. It has to go through its cycles. Historically, most of the currencies that you see, I think the dollar is like stronger than most of them. Now the yen, I think the dollar been weaker than the yen historically, and the euro. You know, but yeah. So, that's why I say you just have to be patient and wait for the refresh. That's what I do. Like, you gotta wait for that refresh. You want a bigger refresh so you can hold for more time. These smaller refreshes that don't show up on the 15, I don't really like those. You know, I don't really like those. Like um, right here, it hit this level, came up. I would say this is one extended. That's two. That's three. That's four. Three is short. Two going to four. That's weak. And then after this, you get another weak move. So that lets you know, okay, this look like one, two, three, four going to two. That's weak. And then five is weak. And then, so you got to have a refresh. And it came down, then it got stronger. So this is one, that's two, this is three, this is four, this is five, and then it went down. And then on the higher time frame, that looked like a zigzag, I guess. And then it come back down and went down like that. You know. So see, that's how it's supposed to go. The volume is supposed to take it out. So we say, wherever it broke from, that's where the price is supposed to stay reject from. So the sellers broke past this right here. So right here is the candle we want to watch to see if the price is going to stay away from that area, and it reversed down from there. Okay. So if I was trading this, I would have just said, so if I was trading this, um, I would just take it to around in here or right here because I know it's coming, but I didn't want to sit and wait. I would just take it to right here because you know it got to bounce up from here, get through this level, then it got to hit and get through this level over here, and it broke right here. So we got to watch this candle. It came up, it didn't, it's not going. So then we know we can take it down at least to below right here, you know, below this, below right here, because you don't know where it's gonna go. When you watching it, you don't know where it's gonna go. And then right here, you say this is one. Okay, you say this is one, this is two, then three, then four, then five. And then they had to refresh. And so you don't know this type of stuff. But see, this is where you you don't know this type of stuff. But like that's why you know be in front of the computer when the news comes out, so you can kind of get a good trade in, because it's those times where you can catch big moves either during the European session, American session, or you know the European session, American session, or the Asian session. So it's this is the New York is the red, and then the Asian or Tokyo is the yellow. The green is European, and then the Australia is the white part. It's the gap in between Tokyo or Asia and the United States. The United States is the red, and then the European is green, and then the Asian or Tokyo is the yellow. So you can already tell, like right here, you see the volume is already solid red, and then the buyers come up, and then so I like to judge corrections based off of the size. So whoever have the momentum have the size. So this is leg one coming out the range. That's two. Okay, now we can see all of this. So I would say this is leg three, that's four, this is five. Now you got to get a refresh. Now we could say this is one, that's two, now that's three. See? But like I said, um, you know, you see the volume is very high here. So when it come up to here, it's easy to see, oh, it's probably gonna come down. And it came down. But if you don't know what happened, you just have to be careful and take it to right there if you're not gonna watch it. But if you're gonna hold it, you have to make sure that you see which ones, what candle broke the price out of this range. So we could say these two candles. So we have to watch those candles, and if the price reacts away from there, that's a sign that it's gonna go down. And that's what you want to see. You want to see the sellers go over and increase over the blue, the green, and then it goes down. Well, like right here, it start to increase, and it has this at the bottom. The sellers is at the bottom, and it goes up. But you still got this right here. It's higher volume, and they start to die off and go back down. That's what you want to see, you know. But like right here, this is higher volume than this, and it still goes up. So that's because the higher time frame is saying go up, you know. Um, Cause just imagine, cause the 4 hours, it's not supposed to go past this candle. It's supposed to like stop right here, I guess, right, and then go down, but it doesn't, you know, because the higher time frame said, you know, because all the volume would be on the seller side. So, but then again, which candle broke? The range would be these two candles. So what happened is not the price is still hanging around there, you know. But then you could do the 886 type of deal, and you could go down. So you have to circle it, find it on the 15, and then you go down to right, put the put the 886 right here. So like right here, this retraced up to here. Um, yeah, I gotta reverse it. I have it wrong. Let me reverse it because I got confused. So yeah, you gotta reverse it. Yeah. So um, this is 886. It never, the sellers never got to 886, but it's not going anywhere. And so you could change the 886 if you want to do a counter trend. But like I said, how you know it's going to get past 886 is when it get there, just go through it. It don't go down and struggle. Um, Cause like that's the wrong. I put it at the wrong place. But let's say you had to, you want to trade, get a counter trend trade here. You have to go to like the 5 minutes. You know, you have to go down to like the 5 minutes. You have to put the, you have to put it on like right here from this point here. It started to range. So you could put it on this right here, and so you have to reverse it again. See, I had to think, slow down and think and all that. So, but yeah, I mean, so you had to reverse. So, yeah, I guess I got to do it the other way. So, well, around in here is 886, and you see after it keep going to um around in here, every time it get around in there, it'll start to come down, even though you can't see it on here. Yeah, because every time it comes down, like if it the further it comes down, that's where you supposed to move the thing down. So this it started right here, it came up to here, 886, and then it came down. So since it came down to right here, you're supposed to move it to right here. So it came down to right here. So if you was looking at it from this perspective, you have to say all of this was gone. All of this was gone. It came down to here. So here's 886 here. And it's coming down. So now if you were going to trade, you take it from there and take it all the way to right here, you know. And then if it get past that, I guess you could say you could take it to uh, you know, the bottom of this, you know. So but eventually it took off after it broke, and then it went on and took off. But that's how you have to do counter trends, and that's usually what I wind up doing because I don't sit there and watch the computer, and then sometimes I do watch the computer. But like I said, I always know it's gonna come down, and that's why I rarely hold for. It's always usually quick scalps. I do quick scalps type of stuff. I don't hardly hold for a long time, but uh, like on this one over here, on this one over here, um, this one right here, I held this one because I looked at it and I was like, okay, I started doing Elliot Wave and I said, okay, this must be two. So I said, okay, this is two. It looks strong. Okay. And so, and the volume is still there. The volume is lower compared to this. So I just got in and I held it to like round in here. And then it dropped. So I got out here. I lost like $3 and then it dropped. And then two went into four. That's a sign of weakness. And then after the fifth wave, the news came out and it dropped all the way down to here. So it's exactly like it's supposed to do. That's what it's supposed to do. Because two went into four, and then this is wave number five, and it's supposed to go down. Then if you look at it on a lower time frame, okay, this is one, two, three, and then four, then five, and then a refresh. And it's still strong because like two didn't go into four, and then the refresh was still wasn't that, you know, okay, it wasn't that long. So one, two, three, you want to say this is four and this is five. So it went into four. Usually the refresh after five going to four. You know, and like right here, this is four too. So this is four on the higher time frame. This is four. So that just show you like okay, and the buyers got some more. So then you get the 1, 2, 1, 2, and it go up. You got two legs up, and then I got out right here. So that was me finally using the higher time frame. But for some reason, it came down and jumped up, and I couldn't decide where it was going to go. Is it going to come down or is it going to go up? And I couldn't decide. But after that, it took off, you know. So, and then I missed out on this because I didn't know. And I just was like, I had to go to sleep, had to go to sleep. And so I just didn't mess with it. It's like I had to go to sleep right here, and I had to go to sleep. I missed this in the morning, and then at night I missed this, and in the morning I missed this. So when you gotta go to sleep, you miss stuff. You get up too late, and that's what happens. So that's why I always wind up just getting these little small trades because like right here it's at night, so I had to go to sleep. Then this is at night, and then this happened during the like 6:30, and you just miss it. And like the only time you got to trade is at night, and then you miss it, because you got to go to sleep in the evening, and that's what happened. But that's just how it is. Like this one here, I had the opportunity and I got in and I held it overnight. I think I held this one for 2 days or a day and a half or something. And so yeah.